Hello again, everyone. It's Vince from TradingWinds.com, and this is our update for May the 10th, 2020. Happy Mother's Day to all the mothers out there. Hope you're having a great weekend. Let's have a look at how the markets finished off on Friday. We did see more upside for equities. The Dow was up 455 points, or almost 2%, while the S&P 500 was higher by 48. Now, both the Dow and the S&P still within that 50 to 61.8 Fibonacci retracement zone, while the Nasdaq has not only cleared that 61.8, but took out this recent high recently. Really looks like it's on its way to the highs. Unbelievable, but there it is with lots of momentum behind it. The Nasdaq was higher by 141 points, or 1.5%, while the Russell 2000 had a really strong finish to the week, up 46 points, or 3.64%. Still lagging behind here, yet to clear the cloud, but again, strong finish to the week for the Russell. Bonds did pull back, and the yield on the 10-year note finished the week at 0.69%. Crude had another strong day, up $1.08, or 4.5% on Friday, still trying to work its way through this level of resistance, while gold was down 21 points, or 1.22%, but still remains right around that 20 period moving average. If we take a look at the different sectors here, starting with energy, the main ETFs, you can see XLE still within that cloud, holding on. Technology sector breaking out. That's what's been powering the Nasdaq forward, and that's sort of leading the way. You can see utilities have pulled back and are back well below that 20 period moving average and within the cloud. In past weeks, we saw all of these sectors sort of looking the same way. This week, a bit of a mixed picture. XLY here, consumer discretionary stocks, doing quite well, moving back towards that 61.8 retracement zone. Retail finishing the week nicely here with a strong move. Ignore this. If I can get rid of this quickly, we'll continue on, or else I'll restart. Got to fix that. There it goes. My apologies. Still haven't gotten around to making that adjustment. XLC, the communication ETF, again, looking a lot like the Nasdaq, breaking that previous high and moving higher, while the real estate sector has gone quiet here, and is now retesting that 20 period moving average from below here, and having difficulty getting above that cloud this past week. Financials as well. Financials not leading the way at all. And usually, when you see a rally, financials usually play a big role. They have not been at all, and are struggling to stay around that 20. XLV, the healthcare sector, took a bit of a week off here, but has been one of the strongest out there, and now setting up again long here. Double dip formation on the RSI. This could be at new highs soon. XLP, nice bounce on Friday, but had a bit of a tough week overall. While XLI, the industrials, again, strong finish Friday, but hadn't done much the rest of the week. Last but not least, the materials ETF, again, making its way towards the 61.8 Fibonacci retracement zone. So overall, again, things look pretty strong, remain okay, while every piece of economic data looks horrible. We got the employment numbers out Friday. They were awful. Unemployment rate of 14.7%, and everybody, including Steve Mnuchin, says that unemployment rate will most likely get much higher before we start to see any sort of drop. So I expect things to get worse, if not better, but according to the way the market has reacted, I guess we should expect more upside in the market if that's the case. Regardless, I think it's an important week ahead. Mostly because I'm keeping a close eye on the weekly charts here. And if you look at the Dow, we finished the week with a bullish engulfing pattern here, but you can see we haven't exactly been able to get above that cloud here as we now battle this zone of overhead resistance. So I think it still faces that, and this week will hopefully determine whether or not we can clear that or break down here. So I'm keeping a close eye on Friday's lows to see if they get taken out at any point throughout this coming week. You look at the S&P 500 on the weekly, we're a little further ahead, but we're about to face that downsloping 20 as well. Nasdaq looks pretty good. This looks very healthy. From a technical analysis standpoint, not only did we hold the cloud, we bounced, moved from below to above that 20-period moving average, came back to retest it, and Friday just took off. We actually closed off the week at the high. So this looks really strong for a move back to those highs. And the Russell, of course, lagging behind and still has significant overhead resistance. So we see a real difference from one index to another. But again, I think the weekly charts are going to play an important role moving forward. Now, this coming week for news, Monday's fairly quiet overall. Tuesday, we get CPI, we get the Red Book report, and we get the federal budget balance number. Wednesday, we get MBA mortgage apps, core PPI, and crude oil inventories, while Thursday, we get jobless claims, and Friday, retail sales, the JOLTS jobs number, consumer sentiment, and the U.S. Baker Hughes rig count. Again, apologies for the errors, but let's keep an eye on those weekly charts. And again, remember, we're having another live market chat tomorrow. That is Monday, May 11th at 1 p.m. Eastern. I hope to see you there, but that's about it for now. Enjoy the rest of your day, and we'll see you on our next update.